to Fast Stock Market News, where I give you all the news as fast as I can. So today was a pretty choppy day in the market. The S&P finishing negative 0.75 in the red, the Dow finishing negative 0.54 in the red, the Nasdaq finishing negative 0.72 in the red, and the Russell finishing negative 0.49 in the red. You can see that crude oil actually had a down day as well. So long term, that's actually pretty good, but it's due for a pullback. It's been having quite a run this week. So there's three things driving the market lower today, and the first one is basically Jamie Dimon of JP Morgan CEO coming out and saying that Jamie Dimon is warning of a hurricane bearing down the U.S. economy. That's obviously going to be spooking a lot of investors and a lot of hedge fund managers. Second big catalyst that's happening right now in the stock market is the Fed has officially begun their QT. If you guys don't know what QT is, there's two things to know about QT. There's QT and there's QE. So when we were getting all those stimulus checks and the Fed was buying back mortgage-backed securities and basically stimulating the economy, QE stands for money printer on. QT stands for money printer off. So during the pandemic, the Fed was doing a lot of QE, which is basically printing money. But now the Fed has decided to get his vacuum, and now he's QTing, quantitative tightening. So it's basically he's starting to sell off a lot of his mortgage-backed securities and treasuries that he has. So that's kind of being put out there in the market, and that's causing a lot more down pressure in the stock market. Third thing that's happening is basically the mortgage rates have continued to rise. So a 30-year fixed mortgage was at 5.36 on Monday, and actually has gone up higher to an all-time high recently, now up to 5.47. So despite the mortgage rates still rising, there is a sense that people are thinking that the housing market might crash, and that's because the housing market, the mortgage applications have fell. And here's a video to show you.
Even as mortgage rates have eased somewhat, hovering around 5.4%, applications just fell to the lowest level since 2018 last week. And back then, rates were only around 5%. The last time rates were this high was more than a decade ago. So where does the housing market go next? Let's bring in Andy Walden. He's Vice President of Enterprise Research and Strategy with Black Knight. Andy, great to have you. What are you seeing in the high-frequency data?
Yeah, and I mean, when you look at what's going on in the market, we all knew early on this year we were going to see a decline in refinance activity, and we all know refinance incentive is down roughly 90%. Now what we're seeing is the expansion of that pullback across cash-out refinances, which had been holding relatively strong. Those are down now 40% year over year. And you're seeing it make its way into the purchase market through that tightened level of affordability, through that lack of inventory. You're seeing purchase volume start to pull back a little bit as well. So expanding beyond kind of what we knew was going to happen in those traditional refis into cash out in that purchase market as well.
And how much further could that go?
I mean, I think we could still see significant pullback. There are a couple major headwinds there for the purchase market. One of them is rising interest rates and the fact that they've now driven the lowest level of home affordability that we've seen since 2006. And the second is the fact that we still have only 1/3 the level of housing inventory that we traditionally should. So both that lack of inventory and lack of affordability continue to put downward pressure on the housing market. That'll likely carry through the summer months.
But the same factor that you're describing, the limited inventory, makes you wonder if that actually keeps a floor below how bad the market could get here.
Yeah, and I think you're absolutely right. It's been kind of the bugaboo for the market over the last few months. It's kind of the saving grace right now, given how tight affordability has gotten. You're right, it does provide a little bit of a backstop there for home prices, which may be needed here.
Guys, that's basically what's driving the price action in the market today. A lot of uncertainty, Fed tightening with his QT, Jamie Dimon's comments, and the mortgage rates continuously rising. So thanks again for watching, guys, and I'll see you guys again tomorrow. Take care, everyone. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.